TheoTRADE. This is Don Kaufman, May 17th, 2024. Just about 40 minutes to go in the trading week here on this Friday afternoon. The S&P futures, oh, they're up 5, which to me is massively unchanged. It has been a grind throughout the course of this week. And again, if you're paying attention, there's plenty of intraday setups. But overall movement in the marketplace, it's been really nothing but CPI. Look, there are still some really critical areas of this marketplace, and that what comes next could define markets for years. We're going to cover that and much more here, of course, on this weekend's update. Let's get right down to it and start to break down some of the trade, which right now, as I said, massively unchanged. Check out the volume in the S&Ps. Again, you're on a Friday afternoon, and it feels like it's like the middle to the end of like August right now. We're only doing 829,000 contracts. It is light and fluffy. And you know what? The entire trading week, and here we go into the SPX, the entire trading week, I'm actually going to back out the time frame here to the last 5 days. We're going to go to a 5-minute chart. I'm just going to show you the entire trading week. What do we have? On Monday, absolutely nothing. If you see this line down below that I'm highlighting, that's where the week started. On Monday, we did nothing. On Tuesday, we did nothing. We maybe a little bit to the upside over here. There was rumors that CPI may have leaked a little bit. On Wednesday morning, shot to the upside. Basically, Wednesday just came down to CPI, okay? Before the cash opened, the market basically jumped at the open. Where did we jump to? Right to the edge of the expected move. All right, so that's the remainder of Wednesday. Thursday, we came almost down to what the upper edge of the expected move, and here we are on this Friday, kind of ebbing and flowing, well, right on the upper edge of the expected move. Again, a less inspiring week than we've seen in quite some time. But overall, yeah, the market's definitely grinded higher, but it was all about CPI and the CPI print, which for at least my point of view, 3.4% CPI. I was kind of asking and polling around over here. What do people think about inflation? I think it's hot, and I think everybody else thinks the inflation's hot, but the marketplace seems to love it. We're going to look at that a bit more here in a moment. So the week started off, pretty boring, nothing but CPI. But here we go. Why am I actually saying that, what could come next is going to kind of define markets literally for years to come? Because I'm bothered by a couple of things that I'm actually seeing on the screen. Less about the S&Ps and more about what are some wild defensive trades, which you're going to look at here in just a moment. So yeah, I just gave you kind of the week in large there is nothing happened but CPI. But I'll tell you what, next week does bring also kind of a defining moment for Nvidia. So, next week, I was looking forward here into the calendar for next week, and what's coming out over here? This is here like CPI again. No, that's Canadian CPI. But on Wednesday next week, we actually do have Fed minutes. Look, I don't think Fed minutes are going to mean very much because some of the big data has come out, after the FOMC met. For instance, the CPI of this week came out after these FOMC minutes. I just don't think those are going to be, all that important. Really, what's going to be, I think, of significantly more importance is going to be Nvidia. Nvidia, which is, in very large part, what got us to where we are inside of the S&Ps on a year-to-date basis. You start looking at year-to-date. Nvidia is now back up 92% on a year-to-date basis. You start to look around some of the other tech stocks here, and all right, so you got Microsoft. Look, I got it. Microsoft's up 13%. It's a big market cap, but big, forget it. I mean, Nvidia is an absolute behemoth. When we start looking at Nvidia, and we actually look at its market cap, you're now talking about a $2.3 trillion company, but it's up 92%. There's nothing else. Everything else pales in comparison to that kind of price action. Apple, all right, Apple's basically flat on the year. Amazon, all right, you got me. Amazon's got a pretty good rally, up about 23%, but it just pales in comparison. You got Google's ripped. It's actually in an all-time high right now, up some 27%. In fact, let me back out of this for just a second and show you Google has really broken out quite nicely in just the last couple of trading sessions to the upside. But again, you start looking at like Meta up some 36%, Tesla still down almost 30%. It's all about Nvidia. Nvidia got us here in the marketplace, and Nvidia, okay, this next week with earnings coming out. Again, those earnings are going to be coming out Wednesday, just after the FOMC meeting. And I got to tell you, okay, on a almost $90 expected move, yeah, you better believe that's going to move markets. I mean, more so than Microsoft or Apple or Amazon or Google or Meta did during earnings. It's really next week, especially given the fact that it's going to be kind of a quieter week. We don't have a big, earnings calendar next week. We don't have a lot of data that's going to be dropping next week other than FOMC minutes and maybe durable goods at the end of the week, jobless claims, which comes out constantly. But the point being on this front is Nvidia is it. Nvidia is actually backing off a little bit. And Nvidia, not only is it going to be big earnings, is up, some 92%. It's all about like that defining moment for the AI trade. And that's what I think makes this even more substantial. If NVIDIA, were to guide higher or lower, and again, in this one, I'm not even going to give a too detailed opinion piece other than to say I'll be hedging this trade to the upside. I actually have some positions in NVIDIA that were short, but I'm actually going to put on a hedge to the upside in case it does explode to the upside. I'm actually going to use what we term a catapult to be able to build my hedge for NVIDIA. It definitely is a little intimidating to see what amounts to basically a 10% move being implied in here. But as I said to you, it could be a defining moment for AI, which if, NVIDIA is to make a substantial move, okay, Microsoft's probably going to move with it. Unequivocally, Meta is going to move with it, and smaller stocks like the Broadcoms and so forth are also going to have substantiated moves around Nvidia. So strap in for that one, because it is, from my perspective, it's more important than any of the other tech earnings that have come out at this point. And as I said, it's a very defining moment for the AI trade to be alive. Now, as I said, what comes next could kind of define markets for years. One of the areas that all of us traders are looking at right now, okay, is aspects like gold, which is once again, okay, ripping into new high territory. This is going to be a closing high today for gold. Silver is right there with it. And again, in this case, I'm actually going to cruise over to SLV, which has had a shocking breakout to the upside. Now, I just want to do a little bit of a timeout for a second, okay? Now, obviously, metals can move up readily with a horrendous move down in the dollar. And unquestionably, the dollar has, in fact, okay, reverted back down. But it's only back down to levels, okay, that we were in, and for example, early April. Okay, so if you take a look though at the gold chart here, all right, so we're back up there, but look, we're about to see a breakout inside of gold, substantial breakout. We've already seen it inside of silver. And the reason I say, what comes next could define markets for years, clearly, okay, there is a dramatic move towards metals, and this may have everything to do with inflation. It has everything to do with interest rates, but to me, it's much more, and we're going to talk about this momentarily. This is like just this nasty cocktail for volatility that could revert back into the S&Ps. Any way you want to look at this, okay? This, it could be a short squeeze. It could be, no, look, people are buying metals. You're not going to convince me like, oh, this is a short squeeze and this is your short squeeze. Okay, I got it. And there clearly could be shorts that are covering inside of some of these metals. But to look at silver over here, there is just tremendous buy side activity, as well as the possibility of a squeeze going on. I was even investigating here in SLV, all right, what option contracts are doing. And I have been looking at today's option statistics here on thinkorswim. I've been looking at this thing for years. No one's ever seen size like this inside of this product. It's huge, absolutely huge. Okay, the size inside of the SLV contract. What I'm talking about is the option size in here. We're doing 773,000 contracts, which is pretty massive. Okay, I looked over at GLD as well. Okay, in GLD, it's rocking, but not nearly as much. And again, to be fair, GLD is literally, like 10 times the size of SLV. And there's some decent contract size in both, but there is just monumental size actually trading inside of the metals. They're clearly in play in every way, shape, or form. And I can't help, but to discern that this is, a kind of duck and cover tactic. Anyway, again, this shapes up. This does not seem to bode well for a lot of different securities. Anyway, it looks like we are seeing, again, trade run into some of the metals. If you haven't looked at like XLU lately, that too is fairly intimidating. Now, I actually put a position on the short side looking for a pullback inside the utilities today. Nevertheless, this could very well be a safety trade as well. So you've got metals that are just shattering to the upside. Look, I'm not here to tell you what I think about what metals are about to do. Look, metals, they're already breaking out to the upside. There's nothing to say on that front. It's more or less though looking into why at this point. And then for me, I don't even think again, I've got some positions that have had some positioning inside of silver and gold. I'm actually out of those. I just put on a position in XLU today. XLU, I'm just looking for a short duration pullback. Don't think I'm in this long term, and I'll tell you exactly why. If you look at stuff like XLU, you talk about shattering to the upside. Why are people moving into the utilities? Are we so full inside of the S&Ps, there's nothing left to buy? This looks like a wild defensive trade. We hit the upper edge of the expected move. The upper edge of the expected move. We shattered the expected move. We doubled the expected move. This week, we hit the upper edge of the expected move. People, that is 5 consecutive weeks at closing at or above the upper edge of an expected move. Of course, I'm looking for a pullback over here, but it's short term. But that's not the question. The question is over here, why are we moving in here like this? Why are we actually into this duck and cover? Why are we actually, diving into metals like they're basically going out of style at this point again? And I think that that's kind of the disconcerting area of markets place at this point in time. And that's why I said, I think it's a wonderful cocktail for volatility. And I'll come back to that in just a moment. Before I get to the volatility cocktail, let's talk a little bit about the bond market. So I have positions specifically inside of TLT, looking for TLT to pull back a little bit. So what we're looking at here is obviously the ZB, which is the 30-year Treasury bond futures. Now, there's a lot of different ways to look at this. I also like to look at this, which is the CBOE interest rate. This is the 10-year. So this is the new symbol for TNX. It's TNX, colon CGI. Anyway, rates are actually coming off recently, that 4.7% back down to 4.35. I believe we're actually going to see some reversion back to the upside. Maybe we've overshot a little bit. If I think that obviously interest rates are going to go higher, I want to translate that for you. That would imply that I believe that bonds are going to back off. In light of that, I still have a trade on specifically for that. The trade I have on is 21 days left. It's actually an in-out spread. This is the 90 half, 88 half, and you can kind of see our open interest sticks out kind of like a sore thumb in there. There's over 3,000 contracts open, of course, in this particular trade, looking for that TLT to pull back, rates to go a little bit higher. Again, this has everything to do with the fact that, CPI came out this week, and apparently the marketplace was happy with that. But with FOMC minutes coming out this week, I believe that could actually pull bonds back a little bit. Again, looking for FOMC minutes to actually cool bonds a little bit throughout the course of this week. Now, what I was mentioning a moment ago, coupled with the bond market, as I said, looks like a pretty good recipe for volatility. So taking a look at volatility right now, this is getting interesting right now. This is the lowest, again, it's the lowest VIX we've really seen year to date. And we only have, and again, I'm actually going to bring up the last 3 years. There's only going to be one print in this marketplace in any recent history that's actually lower than this VIX that we're in, the VIX dropping back down into the 11 handle with everything we've been through, okay, with all, okay, of the bond market still kind of in flux, gold breaking out. I'm telling you, okay, you have to be incredibly careful because I believe at this point in time, a lot of traders are kind of like forcing money into markets, just trying to make something happen. I mean, we're back to like what, GameStop days where markets, again, people are putting money into markets that are basically, bankrupt for all intents and purpose. Well, if I'm talking about bankrupt, we'd have to look over at AMC. Stocks and individual, products that are basically bankrupt here, and they're trying to make something happen in a marketplace, okay, that just doesn't move very much. Right there also reverts back to what I'm saying. That's a cocktail for volatility. Take a look at the spiders, okay, the option chain. And when I start talking about a cocktail for volatility and being don't be a volatility starved animal, don't force capital into this marketplace. Don't force something to happen, okay? That's not going to happen. One of the aspects that really bothers me, I am still listening to people every day. They're talking about, let's sell options, man. Let's sell options. Do you realize, okay, that the May 20th is this coming Monday. The volatility is on average 5.58%, okay? Now, I could actually translate that from spiders over to SPX, but better yet, let's just cruise over to the SPX. Take a look at the SPX. You're looking at a 5 vol. Why would anybody ever want to sell that? There's nowhere that volatility can go but up. And that's why I'm saying, like, this is the cocktail for volatility until itself, because what can happen is the slightest bit of movement, for those that have sold options in here, the slightest bit of movement could actually spark wild and unruly risk to the marketplace. As I said, the cocktail for volatility is low volatility itself. Okay? Don't be a volatility starved animal. Don't force trades. I'm not saying don't sell premium as a blanket statement. There's plenty of premium to sell in some of the back month options, but I am unequivocally saying don't sell premium in short dated options. You're going to want to be a buyer of short dated option premium out there. As I said, don't be the volatility starved animal. Now with that, okay, one of the things that really fits into this very nicely, look at the number of breaches of expected move that we've been seeing, okay, in recent weeks. So this is the most recent. This is 1, 2, 3, 4, okay, 5 weeks. That's the most recent 5 weeks. Okay, there's 1, 2, 3. Okay, and today, this appears with only 20 minutes to go, this appears to be another breach of expected move. So you're seeing 4 out of the last 5 weeks, okay, where the market is moving more than implied volatility is giving it credit for. And when you look at this next week of trade, and I know, okay, the end of the week, next week, May 24th, you're coming into holiday week, right? It's Memorial Day. For those of you that are overseas, you may not know that, okay? But the end of next week is a full week of trade, okay? But in the US, right, by Friday, things are really going to quiet down because people are going into a 3-day weekend. Can you imagine, right, that we're going to see $55 of price action, okay, the entire week? It's going to be one of the lightest expected moves that we've seen in any recent history. That kind of correlates to what we're seeing in the VIX. Basically, one of the lowest VIX prints that we've seen in years. And we're also going to see, okay, one of the lowest expected moves that you've seen in years. And meanwhile, okay, Nvidia alone could rock this marketplace. As I said, it's a defining moment for the AI trade. But what actually has me much more interested is what's going on inside of metals. That's going to be a big focus point, not because you necessarily want to be able to trade gold, not necessarily because you want to be able to execute in silver. They're already breaking out. It's that trade reverberating back upon the marketplace. That trade, okay, playing out in both bonds and equity products in an extraordinarily low volatility marketplace. To me, it really is kind of that perfect cocktail for a very volatile marketplace that could break out really at any time. Thanks everybody for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.